So this video is going to be on order block flow. All right, so we're already familiar with structure. We're familiar with market structure, price action structure, higher highs, higher lows, lower highs, lower lows, and so on. Now, understanding to a deeper degree now of how the market moves, what we can now analyze is when we could actually know when the market wants to reverse. Like the market always gives us signs, right? So usually we're catching reversals off of like daily zones, which is extremely valid. Now, once we reject from a daily zone, we can use block flow on the lower time frames to help us catch continuation trades in the same direction. Now, what I mean by that is check out. Let's actually keep going down. So let's find a good transitional area. So yeah, this thing has just been on a bull run for a minute. So let's just take this area here, right? So we gapped, so let's skip that area. And let's take it from, this low. So we make a new high, and you can see when the market starts retracing, we form a bearish engulfing or a bearish block, right? So we fall, we retrace, and then we form a bullish engulfing or a bullish block. So what is this indicating in this case? To me, it's indicating that price has hit a level of demand here, okay? It hit a level of demand that's potentially strong enough to hold price up, okay? So now we form another order block on top of this order block. And we can now see price maintained it and now pushed up, okay? So now we continued. Now you can see this low pushed us up technically to a new high from this wick, but price ended up pulling back, and before we actually had candle closures up here, the market rejected here. So we pulled back, we didn't break structure, but we just went up to a new high now, okay? So once again, if we watch how the market moves, the market will tell us when it's ready to reverse. Once again, when the retrace was over here, what did the market do? It formed a bullish engulfing or an order block, and then we formed a bullish bearish bullish pattern, which is another order block. And then all of these order blocks, we formed two more, so a bullish bearish bullish, bullish bearish bullish. So those are all order blocks confirming that the market is building up a level of demand that's strong enough to push the market up to a new high. Okay, now something to keep in mind from the first video where I kind of went over order blocks and bases. This kind of movement is not considered an order block or a base. Number one, it has this candlestick in between, which is more like a doji. And then also, you don't want candles with crazy wicks where it's like indecisive candles. You want a nice sized body on these candles, okay? Now, once again, it can have a wick. It's okay to have wicks, but when it looks more like dojis or spinning tops where it's extremely small, we don't really care too much about those, okay? It needs to be some form of meat to the candles, if that makes sense. All right, so nonetheless, if we look at this whole leg of structure, right? The market doesn't reverse for, just some random reason. It reverses off of previous price action, okay? Now, when the market decided to pull back here, when we're looking to the left, where would price want to reverse? Well, if we know order blocks and bases are where equilibrium is in the market, and we could tell as this pushed, this was an imbalanced push because the market pushed very hard, it pushed very impulsively, which means that the market had to go back to a place that it knew had equilibrium. Now, another way to consider this, when there's enough buyers and sellers at a level to handle the orders, the market's not going to change price too much. It's going to stay in a smaller range and consolidate. So for an example here, we had stayed in between, 140.354 and 140.523. Okay, so we stayed in between this level for about 1, 2, 3, 4, and like some of this candle, so 5 candles. Okay, so that means while price was sitting there for these 4-hour candles to form, there were enough buyers and sellers at that level to handle the amount of orders that people were putting in or banks were putting in or whoever. Okay. Now, when the market shot up with this bullish engulfing here, what that's telling us is that there was now more demand than there was supply at this level. Okay, because if it was an equal amount of supply and demand, the market would just continue moving sideways. So this candle now told us that there was far more demand at this level than supply. So now where's price going to go? It's going to go back to a level of equilibrium where there's an equal amount potentially of buyers and sellers. So it's going to find a level. It's going to once again form some sort of pattern, a base or an order block, and then it's going to reverse. It's going to go back into an imbalanced impulse, and then it's going to go back to equilibrium. It does this over and over. So to explain this on the chart, equilibrium, impulse, equilibrium, impulse, back to equilibrium, impulse. Okay, so this is the same thing as higher highs, higher lows, and so on. But by understanding this concept, you can now see the key areas in the market where you'll get those huge reversals. Okay, so once again, we don't count this as an order block. This wouldn't technically count as a higher low to me because this is just sideways movement. It's not really telling me anything. It's not telling me the market truly wanted to retrace. It's not telling me, too much of anything. When I look at this push as it's coming down, if I look to the left, I see this level as an extremely strong level of demand because we formed a huge bullish engulfing from it, and we also pushed up to a new high. Okay, so when the market came back and tested this order block, we had a very strong rejection from it, and we made a new high from it. So by understanding where these extremely strong order blocks and base levels are, you can catch huge pushes in the market. Okay, now check what happened here. Once again, why did price reverse from here? Why didn't it reverse from here? Why didn't it reverse from these other areas within price action? Well, number one, this was like that small doji candle we were talking about. So sure, it may cause price to stall. If we drug a line, let me do it a little more accurately. But if we drug this across, potentially, price may have wanted to retrace from this point, but it wasn't strong enough to actually cause a new impulse in structure. Okay, so it's going to go back to that order block. All right, so you can see the order block was retested perfectly, and we get a huge push up off of this level. Now, this area here, once again, with this spinning top kind of candlestick, I don't really prefer those. This one, in this case, did play out. But once again, I don't really prefer those. I want to see a nice size candle. Like this one looks better to me because it's more body to the candle. So for an example, we could have drawn an order block off of that level. And we see that price tried to smash through it. But overall, we stayed within that area. And then we ended up pushing out of it after we formed another bullish order block and pushing up to retest the highs. Okay, then we decided to crash. All right, so moving over here, we can see that basically the market pushed up to a new high. We rejected, started just playing around. Now, when the market decides it's ready to start pushing with the overall trend again, forms this candlestick right here, which we can call our order block that caused this new impulse. All right, so now we push up, we do a bullish bearish bullish pattern. Once again, this has more body, okay? It's more balanced than, a candle like this with a huge wick, smaller body, or these candles, okay? So this would count as an order block for me, or a base. I would highlight this area here, and I would be looking for orders off of this level. Okay, so if you're sniping the orders off of the 3-minute time frame, this wick went up over 50 pips. So that could have been a trade right there. Once again, price tapped here and shot up. That was about 30 pips. Once again, price shoots back in. And this one goes for a swing of to the high 160 pips, and it goes on a run that never comes back. So as you can see, this is off of order blocks in confluence with those H4 zones that I was talking about as well. But this is how you can understand the order block flow. when you understand that price is making bullish order blocks, we're overall in bullish structure, and we haven't hit a daily level that could potentially reverse us yet, we're simply just catching more entries going with the flow of the market. All right, so if you missed these entries, the market made another order block here, and you can see it did not get retested. Why? Because price decided to make a new order block or base. All right, we get that retest, and that's where your entry. That's where your entry is coming from. All right, for 88 pips to that high, 100 pips there, and it goes on a swing. But price did come back lower here, so if you did hold it, you would have got stopped out. But nonetheless, 100 pips is way more than we need. All right, so nonetheless, we formed another base here. All right, and you can see there was a gap, but price shot down and then rejected and shot up to a new high. Once price decided it was ready to reverse, it forms a bearish order block. A strong bearish engulfing, price shoots back up to retest what it broke and then starts dropping. From that point on, we start respecting bearish order blocks. So once again, this candle has more meat to it than, for an example, this candle here. Okay, so this would be fine as an order block to me, and it also led price to a low past the previous low. Okay, so this would count as an order block, and when we come back to it, look what happens. Price rejects and falls. All right, price creates another order block here. Price rejects it and falls until it falls to a level that's strong enough to reverse price. Okay, which happens to be this order block here. So when you're thinking about retraces, you always want to look to the left and say, okay, where are my potential order blocks that price can want to reverse at? Because that's what's going to end your retracement. An order block to the left that's strong enough to push price back into a overall continuation leg of structure. All right, so once again, we get a bullish bullish pattern here when the market is ready to continue. So you can see a huge engulfing close. Do not buy it there, okay? Just wait, be patient. Wait for price to come back. It always does. Okay, so in confluence, if we just had our normal liquidity zone, we could have had one entry here, but if we had our order block area adapted to it, we had an entry here, and then we had another entry here. Okay, but you can see overall, the flow is staying the same. All right, so with order block flow, you want to use it not only as a confirmation for the direction of the market, but you want to use it in confluence and say, okay, I know that, I just left the H4 support level. So I'm making higher highs and higher lows. I know that, a daily resistance level or, our zone, our liquidity zone is 100 pips away. I know that price is now retracing towards a potential higher low point on the H4. I know that we probably will see a rejection. Okay, cool. Draw your zone. Did an order block form when price rejected? Yes or no? If it did, that gives you more confluence and simply just wait for that pullback. Now, in some cases, for an example, this one, we didn't get a new order block formation here. So this would have literally just been a zone trade, which is perfectly fine. It would have just been a normal supply or demand zone trade. Now, once this order block formed here, now we, instead of just highlighting the wicks, we would now highlight that order block. And you can see now that we would have been able to catch this trade here as well as this trade here. All right, so I hope this is starting to make sense to you guys a little bit. All right, so once again, when price is ready to continue, and we can even take this area here. So we had this bullish pattern. So if we highlighted that, right, you see price pushed all the way down into it here. So price pushed all the way down here and ended up closing here. So it pushed all the way down and closed up 24 pips. And then this wick right here went up for about 50 pips. So this was even a winning trade if you were buying from this order block retest, okay, and catching the transition. That would have been a successful trade right there. You get out of the trade or take partials or whatever you do, and then the price falls, right? Which is perfectly fine. But now we just want to be patient and see what's going to happen next. Forms another order block and pushes up. We get another bullish, bearish, bullish order block. Okay, so now we know we're looking for entries based off of this order block. We don't expect price to retrace to this wick or down here anymore. We expect it to just retest this order block, give us a transition out, and then it's going to continue flowing. All right, we get another order block formation here. Price pushes up, ranges, almost comes back to it here. We miss it by a little bit, and then price pulls back up. Okay, we have a bullish, bearish, bullish pattern here. If we highlight that, we see price respects it and pushes off. Bullish, bearish, bullish, retest, pushes off. Pushes off, bullish engulfing, retest, rejection. Bullish, bearish, bullish, retest, rejection. So this happens over and over and over again. And remember, this is the H4 time frame. So if we're just catching these trades off of like the 3-minute entries, 5-minute entries, even 1-minute entries, you know, our stop losses are extremely small and we're catching the next leg in structure on the H4 time frame. 80 pips, if you're able to do a 10 pip stop loss, that's a 1-to-8 trade. And you can easily do it because we understand that order blocks cannot be broken until the trend is ready to switch. So if we have this information, if we know that the banks are protecting their orders at these levels, why not trade with them? Why not make the money with them? Why not, you know, make money as easy as possible? That's what this is doing. So combine this with the knowledge you already have. Once again, this isn't just something you want to trade by itself. Incorporate it with everything else you've been learning, and I guarantee you're going to see a crazy change in your trading.